Hi everyone, I hope you're all well. Welcome to this month's edition of the Price Index published by Zoopla. Now this is everything up until the end of June 2021. So these are all the figures taken into account, and the index is published up until the end of June 2021. Now what we typically do is we spend the first minute just summarising, and then we go into a bit more depth. So in case you don't have much time, the first sort of minute and a half or so is the summary of this particular video. So as you can see here, we've got house prices up 5.4% overall year on year. The demand for homes is up 23%, and of course the flow of supply is down 2%. Now we'll come to the supply in a bit and why that's still down, because obviously we've come out of COVID. Construction has come out of COVID, I should say, and it's still, and construction is pushing on, but there is a reason why the flow of supply is still down. Now in terms of the summary, we've got buy demand is falling from record levels, but we are still up. Now that's the key. We're still up on normal market conditions. We're actually 80% up in compared to sort of 2017 to 2019. So we're well up in terms of normal market conditions, but we do expect it to dip off as two things. First of all, as people start to establish a bit more of a routine after coming out of lockdowns. But secondly, the initial stamp duty holiday period has ended. Now that means that demand has dipped by 9% within the 2 weeks after July the 1st. So that is all to do with the initial stamp duty ending. There is another phase of the stamp duty ending, which will end at the end of September. I don't expect that to have too much of an impact. As I say, I think the majority of the impact has already been done, but it only dipped by 9%. Now, price of homes continue to rise. Growth, as we said earlier, 5.4% in June, up from sort of 2.2% where it was a year ago. And the price growth is set to hit 6% by the end of the summer. Now, they have got it here that it expects it to slow in quarter four. Now, that's normal anyway. Quarter four is normally pretty slack, simply due to people don't want to go out in the cold and the rain doing property searches. So typically we do see demand start to slack towards the end of the year. But they've still got ending the year between sort of 4 to 5%. So we're still looking at house price growth to kick on. Now, this is key as well, and we're going to come back to this in more depth a bit later on in the video, but the search for space is driving prices for houses up 7.3% over the last year, while the growth for flats significantly weaker at 1.4%. Now, that's key because we do promote city centre flats, but there's an important point that needs to be made here, and we're going to come back to that towards the end of the video. London is obviously polarised. You've got demand in outer London running 86% ahead of sort of 2017 to 19 prices, and inner London, demand I should say, not prices, and inner London sort of just up around about 2%. So let's sort of dig into a little bit more detail there. Well, look, the price increases is still going great. We've got annual house price increasing at 1.3% in quarter two. The average house price, I should say, 1.3% in quarter two. It takes the annual rate at 5.4%. Now, that's a huge increase over what it was last year. We obviously expected that because this time last year we were kind of just coming out of another lockdown. But overall, some of the best cities are performing 7, 8, and nearly up to 9% overall, which is a huge increase. It's got here, of course, Rochdale, Bolton and Hastings are all registering growth of more than 9%, while the major cities, your Liverpools, your Belfasts, your Manchesters, 8.9, 7.7 and 7.4% respectively. So it's important, as I say, that because we are still saying that the UK, in terms of the buy-to-let, UK larger cities are still key, we're still looking at sort of like the Liverpools and the Manchesters where we're recommending. Now that kind of flies in the face a little bit, going back to what we saw up here in terms of that the houses are actually outweighing the flats. But when you go and you look in Manchester city centre or Liverpool city centre, you're going to actually see the majority of city centres are made out of apartments. But again, we'll come back to that in a bit more detail. So overall, the average house price is now pretty much at its all-time high. You're looking at 230,700 in June. That's the average UK house price. Now that's well above the dip that we saw sort of back here in sort of February 09 when it was just below the sort of 160 mark, and we've just seen a pretty much upward trend over the last sort of decade or so. We do expect this to sort of peter out, and what I mean by that is I still expect there to be growth, but I expect there to be slower growth over the coming years. And in terms of, we get asked this all the time, in terms of an actual crash, we certainly don't expect it anytime soon. It's only really when a fundamental change happens, and we're still looking at great interest rates at the moment, really low interest rates for mortgages. There is talk of inflation and how they're going to curb that, because we know that inflation is going to rear its ugly head. So what a lot of people are doing is they're signing for longer term mortgages just to ensure that they don't have any impact on their variable rate mortgages. So as I say, we expect price growth to start at the end of the year. This report says pretty much the same thing. They do expect it to be in positive territory, as you can see, but between 4 and 5% in December, rather than sort of like the 7, 8, 9% where it has been. In demand, again, we've got 80% increased demand from sort of 2017 to 19. The economy is really opening up, and we do expect the demand to then tail off, simply because people have got other stuff to do when they can go out and they can spend their money on drinks, food, restaurants, leisure. Suddenly the thought of moving home, gets put on the back burner. So as the economy opens up, we do expect that demand will start to ease again. But there are still active buyers. Now, this is the search for space. This is the key. So a lot of people we call in or call into us, and they say, well, look, search for space, demand for gardens. Now, that's all well and good, but what I would simply say to you is look at your target market. Your target market for the best occupancy rates and the best people who let are always young professionals. And young professionals want to be in the hub. There is a demand for space. There is a demand for gardens, but that's coming from young families, 1, 2 children, who are suddenly thinking, well, actually, I've lived in the city centre. I've done city centre living. They own a property in the city centre, and now they're looking to move out. And they are the ones that are driving this demand for space, demand for garden, demand for better schooling, and simply open air areas where they can take their children. However, the demand for the city centre rentals, which is the key, is still extremely high for the young professionals, and that's for the apartments. So there's a difference. You've got to look at it through the eyes of your renter, because although you are buying a property, you're not buying it to live in, you're buying it to let. And it's the lettings market which is key to us, not the buying market. So it's great to see that the property prices are increasing. That's perfect for us, because long term, that's where we want to see. We want to see growth, so you can get a great growth over the long term. But actually, it's the rental market that we're focused on. We're not worried that there's an increased demand for space from buyers. It's if there's an increased demand for space for renters, and the renters that you're aiming at, there isn't. It's people are still looking at city centre living now more than ever. Now lockdowns are easing. They want to be in the hub of it. They haven't seen their friends. They've not been out. They want to have that social aspect. And it's the demand for the city centre living which is key for the demographic that we're aiming at. So I would still be aiming at the apartments in the city centre is key for me. So as you can see here, though, still robust demand. Now, supply has been constrained. You've got here a rise of activity. Now, there's a few reasons why supply has been constrained. First of all, people haven't wanted to put their properties on the market, simply because they haven't wanted to conduct viewings through COVID. Secondly, the construction industry fell off the cliff. Everyone, simply didn't turn up for work. They didn't know what they were going to do during the first lockdown. But now that's re-established again. What's now happened is a lot of development sites have had to slow down because the struggle to get materials. We've seen, timber, plasterboard, really hard to come by. So what they've done is they've put up prices by 30, 40%. So then the construction industry has a conundrum. Do they carry on building, or do they stop and wait for prices to fall? So we've seen a lot of slowdown on sites because of these reasons. And again, simply because, you just simply can't get hold of the materials like you could 12 to 14 months ago and beyond. So at the moment, we're seeing a bit of a bottleneck of supply, and I do expect that to continue for the next sort of 6 months or so before it starts to ease up. But as I say, in terms of sales agreed, we're 22% ahead of where we were in average in 2020 levels. And this is a big figure, 1.5 million completed transactions this year, up from 1 million last year. And it's highest level since 2007, which is a huge increase. We then come on again back to the search for space as we see the trend is clear. The demand for houses, this is purchases, don't forget, is twice as what they registered during 2017-19, and the demand for flats have not kept pace, but it is still up 34%. So demand for flats, although it's not kept pace, is up 34%. But as I say, as I've said previously, the key to this is not the buying, it's actually the renters who you're aiming at. So we then come on to sort of London and where things are really happening in London. But again, the key to us has always been pretty much the north. There are pockets of London, which is fantastic. Again, we've recently moved with Hounslow, project in Hounslow, which has been great because it's been really easy to get into the city centre. So again, you can see there the growth of around about 2 to 3% year on year for Hounslow. And again, the rental market is fantastic there. But the key for us, as I say, is still the cities and the areas in the north. So if we head down to the chart, Liverpool still remains top, 8.9%, which is phenomenal. Belfast has replaced Manchester, but Manchester still comes up in third at 7.4%. And of course, you've got the normal names there: Sheffield, Nottingham, Leeds, Leicester, Bournemouth, Birmingham, Cardiff. Great cities which are doing fantastically well growth-wise. As I say, the key report is going to be the rental report, which comes out over the next week and a half to 2 weeks, which we'll do another video on. But all in all, healthy property market, great time to get involved.